If you know that the success rate in the NFL is dependent on turnovers, you want to look at those 10 players and make sure that you only consider the quarterbacks that have the least amount of, let's say, interceptions, right? You would just rank those quarterbacks with the number of interceptions, and you would, the ones that had the most interceptions, you just put them to the wayside and don't even choose from that group. You just choose within the best quarterback that has least amount of interceptions. That's our first step, is only consider the investments that have the best characteristics. And then
and that's conditional probability,
right?
On
Exactly.
the first part.
Exactly.
And then there's a second part to that process.
Yeah.
How's that? Tell me about that.
Okay. Then what we want to do is we want to calculate the expected value of those 5,000 investments, and the calculation for expected value is the probability of success times the change in value, or the payoff, so to speak. So in terms of the NFL, let's suppose that you've already selected your quarterbacks, and you have 5 quarterbacks to choose from, right? You have Tom Brady, you have Drew Brees, you have Dak Prescott, you have Mahomes, right? You have all these top quarterbacks. And from historical data, you know that the quarterback that attends the most practices has a higher probability of winning a game. So you want to know what quarterback attends the most practices. So let's say Tom Brady, there are 10 practices to attend, and Tom Brady he goes to all 10 practices, right? Prescott, for whatever reason, health reasons, or he's interested in something else, he only attends 1 practice. And you know that if a quarterback attends all practices, all 10 practices, there's a 50% chance that he's going to win a game, or more than 50%. And you know that if a quarterback only attends 1 practice, he only has a 10% chance of winning a game. So who are you going to put in the game?
The guy who attends all 10.
Exactly. And let's suppose that it's the Super Bowl. There's a lot of money on the line, right? So what we do is we just take the expected value, in this case would be 50% chance of winning times the payoff, right? So let's say the payoff's $100. So it's 50% times $100 is a $50 payoff. And then the quarterback that only attended 1 practice, he only has a 10% chance of winning. So you take the 10% times the payoff, which is $100. So his expected value of winning is only $10. So what we do, we know that there's a higher probability of success. So what we do is we just calculate what we think is the 1-year change in value times the probability of success equals our expected payoff, and those are the companies we invest in.
I'm Steve Paulus, Head of Institutional Sales for Sparrow Capital. You can reach us at sparrowcapital.com or call me, Steve Paulus, 314-725-6161, extension 15. Once again, thank you, Gerry.
You're welcome.